Hello everybody, I hope that you're doing very well and welcome to this evening's Contenders live stream where I am going to be going over Delta. This is a really good live stream. It's a really important one and yeah, I hope that you thoroughly enjoy it. So I'm going to be starting off with ZEC chart of the week. I chose this one primarily because it was based off a volume and this is what we're doing, a volume series. So ZEC chart of the week. And then, yeah, moving on to Delta, how I read Delta, how I like to trade off of Delta. In this includes breaking up out of ranges and ranges. Okay, so yeah, it's a really informative live stream for you tonight. Have your pen and papers at the ready. And yeah, hopefully you learn a lot from this one. So yeah, let me just, as you can see, I've made a little bit of adjustment to how this actually looks. So hopefully you can see the screen and hear me all okay as I have slightly adjusted this. So yeah. Hello everybody, so let's begin. So this is the disclaimer. As always, you just need to pause and read through this disclaimer. And then moving on to what I have chart of the week here. So ZEC chart of the week. And I'm going to cover a question that I was asked today as well in this one. But yeah, basically what I was looking for is we saw a break up out of it. So we had a mini swing failure pattern of the low and a mini accumulation range, one could say. So then we obviously break back up to the weekly. You can see what it was really clear what was happening. Weekly resistance, weekly resistance, weekly resistance. Get above, straight back down. Okay, above, straight back down, down, take the lows. And we were breaking up here. So I was going for an aggressive entry, yeah, looking to trade it up to obviously much higher levels with a take profit one at the monthly. So this was the trade setup that I had in mind. So now if I close this a second and we go over to what this actually looks like at the moment, I guess I will... Well, this was the first section, and then I did take profit one on this one a little early today after I saw a red flag, which I'll talk you through now. So this is the chart setup. Okay, so this is what we had, and it's still obviously relevant right now. So I will remove that a second, and I will remove this. So this is what we originally had. Okay. We're looking at this on a bigger term here. Okay, we obviously have a really big high up here. Okay, massive like drawn towards these sort of highs if it can get going here. And originally what we can see is a swing failure of the lows. So I will draw this back in now. So swing failure of that low. And from there, it never really stopped. You obviously take the low, so really clear swing failure, back above, and then from there you grind up, really quick move back into weekly. Okay, so you get that quick move into the weekly, get a pullback from that, consolidate through the weekly, another push to the upside. After we got this push to the upside, it was after seeing this, and this, so the last three upwards thrusts in a row was where I got really interested because we had finally taken out these highs here, which for me were very interesting. Okay, so we finally got back above that. So what was my confluence here? It was support flipping into resistance, expecting this resistance to come back into support, which you can see is exactly what it done there. So yeah, that was the reason for this, and that was the reason why I went for an aggressive entry. I could have waited for the weekly to be retested, for example, or I could have waited for like the CC to be tested. And this is what I want to cover here of somebody. I'm sure they don't really care if I said anything, but basically there was a question of they showed their chart of the week entry, but obviously price here is bouncing off of the value area high. It doesn't come down to the weekly, doesn't come down to any lower levels you might have been looking at. So the question was, hi Daniel, I struggle with determining how much of a retrace to expect sometimes. So essentially the question is, here, for example, my entry is going off of an original idea, okay, but then we obviously have a little bit of a thought process which goes on. Like this is obviously the one that I was showing earlier where we were looking at this off of a move off of the weekly. Okay, so as I was explaining this, because I did explain this to somebody else, so if you were looking at this as your entry, and this is obviously an acceptable one, you could have been taking it off of this lower weekly, okay, but what you have to think is price going to come down to this lower weekly, which obviously could have been the case. It could have come down there, or is price more likely to get a higher retracement level? Okay, so as I was explaining this earlier, this was, in my opinion, like an acceptable entry, and there's nothing to be annoyed about if you went for this as your trade setup. So essentially, you were looking at it like looking at it like this, where your entry is offered a weekly, your stop is, in my opinion, would still be in the same place, and let's say you were going for an upper target. Okay, this is obviously still an acceptable trade entry, and when you trade alts, there's nothing wrong with having lower expectations, so to speak. There's nothing wrong with expecting lower levels on that entry trigger, because of the fact at the end of the day on alts, you have to think to yourself, like, if you do miss an entry, you do not lose any money. It's just an opportunity missed rather than anything. You know, I would never ever get annoyed with myself with having this as a lower entry, because I feel it was an absolutely acceptable one. But the question is, why am I going for a higher entry here? And the reason is volume. Okay, what have we been going over recently? It's the volume. And this for me is the standout thing. So firstly, it comes off of a swing failure of the lows. But really the important thing for me is this. So take a look at the volume that we got on this. Absolutely beautiful. Okay, so absolutely beautiful. I'm waiting for this to load so I can delete it straight away. Maybe it's not going to load. But yeah, this is... yeah, here we go. It just gets in the way a little bit. So this is what I'm looking at here. Okay, so what we can see, okay, is actually price breaking up originally, and then another uptick, and then another uptick. And you see how the volume is increasing. So we're getting impulse, another attempt, breaking through. Why is this really, really bullish, in my opinion, and why is it not likely to come down and get a heavier retrace? It's because we're breaking up here on increasing volume and increasing delta. That is telling you price is breaking up bullishly. There's no reason to expect a heavier retrace when you see these signs. Okay, the increases in volume as we're coming up. Okay, if we had obviously taken this high on lesser volume and this volume bar was down here lower, well then yeah, it's like more likely that this is going to get a heavier retrace. But really the answer to the question was, instead of like expecting your entry like this, and this is the one and this was the one that I was giving as the example to him, that you could have obviously looked at, I don't know, something like this sort of thing with your stop loss there. This was an absolutely acceptable trade entry, but why did price not retrace, in my opinion anyway? Why did price not come down and retest the weekly, like, to be honest, many were expecting? Why did it come back on and retrace off of a higher level? Arguably, as you saw me map out, that support resistance level. Okay, the support, resistance. Why was price bouncing off of this one instead of getting a higher retrace? Okay, or a heavier retrace. And in my opinion, it's really, really clearly, well, it's in my opinion anyway, that you didn't get a heavier retrace because of the fact we were breaking up on an increase in volume. Okay, so this is really, really, really key. For me, there's two really key reasons, actually. So you can see how you were sideways range bound. Okay, so we're sideways range bound, and price was on standard sort of average sort of volume, but then the swing failure also came on really high volume. You see how the swing failure was on high volume. I like to trade swing failures on altcoins specifically, as you might have saw the live stream, like an added live stream that I done the other week, where I was going through my alts where I like to take the trades. I love to see these swing failures on an increase in volume, because that for me shows that many people sold that swing failure, or many people, you know, if it's available to, are trying to short these, you know, it's short getting a breakdown. Or obviously on this coin, more likely people will have been longing the range, stops below the low, they get stopped out on a flush in volume. That's for me is the first thing that I like to see. So if you were just seeing this part of the chart, that is what I would like to see. A swing failure of the low on an increase in volume is really good for me. Okay, so that's like a really good sign that I'd like to see. Then on top of that, we also have the first break up here, which again is on, you know, pretty high volume, but nothing massive. It's about the same as the drop, but still stand out. And then you get another uptick here, which is on another increase in volume. And then the icing on the cake, absolutely, you got to be reacting off of another really big uptick in volume as you break the highs of that range. Okay, so as you break the highs of that range that you've been trading in, that's obviously really, really bullish, in my opinion. It's pretty bullish. So that's why I don't think you got the heavier pullback. To answer the question, basically, that's why we didn't get, in my opinion, the heavier pullback onto that weekly. I think it was an absolutely acceptable trade setup. Don't beat yourself up about it. You know, it's not the end of the world. You didn't lose any money, but that's the reason why you sometimes will look for heavier retraces. Obviously, if you're breaking up on strength, you're not going to expect a heavier retrace, whereas if you break up really weak, then you're going to expect a heavier retrace, aren't you? So it's as simple as that, really, if I'm honest. And then why did I take profits early this morning? Well, it's because you can see here, looking back at the volume, okay, so looking back at the volume, you can see how we then broke up on this high. So we were getting break up, and break up on increasing volume, and then here we take the highs once more on a decrease in volume. So this was, for me, was a bit of a red flag, as well as the fact that we basically rejected off a monthly. I didn't quite hit my take profit because I was a little bit greedy and I actually had it at a monthly, but nevertheless, I missed it. So instead of just like holding on to it and thinking, oh my god, I missed my take profit by 2 sats, like I'll just hold on. No, I took profits a little bit early, and yeah, I'm pretty content I did, because we obviously got a bit heavier pullback, but nevertheless I am still in the rest of this long position. But yeah, I just want to end with that one, because a lot of people were asking me that this was an absolutely valid setup, okay, and obviously this was one I was showing, and you know, for me it was a valid idea. So don't beat yourself up about it, but that's the reason why I went in the end for a, you know, wasn't expecting a pullback to the weekly, and it was really simply because of the fact that you got that volume on the break, really, you know, really strong volume. So yeah, there you go. There's the answer. I hope that helped you, and yeah, that was the original. This was my original one that I was looking for back on the 18th, and it's now the 20th. So yeah, there you go. Hope that was helpful. And yeah, what I want to move on to now is Delta. So let me take a quick drink. So I am going to put this into a full screen mode, a second, and then we're going to go back across to where we were. So let me just minimize this, and let's begin then. So yeah, Delta. This is a really, really, really important live stream. Like, it feels like we've been building up to this one quite a long time. You know, it's the next part of the jigsaw puzzle, so to speak, when you are a trader. You know, I would honestly say that when you do not have this understanding, you are somewhat like trading blind. Okay, so it's a form of like trading blind to the market, where, you know, yes, of course, you can be trading without this, but when you have this information, okay, especially in cryptocurrency, because this is pretty standard, I would say. This is a pretty standard way of trading for, you know, in my opinion, like the stock markets. You know, you got to be using this type of information, whereas in the cryptocurrency market, being a fairly new market, you know, the absolute vast majority have no idea what this is. So when you have this understanding, you have like a massive advantage over the majority of people, because yeah, it's a really crucial bit of information to be aware of, and what it is, I suppose, and how you actually trade off of it. So yeah, tonight we're going to be going over Delta, okay, what Delta is, then how I personally trade off of it, okay, because many people, this is the thing, many people will be looking at it in different ways. They'll, you know, you give the same, you know, you give 10 people the same information, but then they might come out with 10, you know, you might get 10 different results from that. So it's really important to understand how I actually trade off of it, rather than going off of what you might read in other places. Okay, you're here to learn from me, although it might again not be necessarily what most people are going to say about it, but nevertheless, so basically, firstly, an introduction to this. So Delta in trading, okay, you obviously have passive and active order flow, and your passive order flow is limit orders. Okay, so when you're entering the market passively, that's known as entering a limit order. You are placing your order in the books, and you're stepping back and going away, and either you get filled or you don't get filled. There's two outcomes of a passive order. Okay, you either get filled or you don't get filled. Whereas an aggressive / an active order is at market, where you 100% are going to get filled. You have no doubt about it. You are helping to move the market, essentially. So for a passive order to get filled, you need an active order to fill it. The market only moves from market / active / aggressive orders, all the same thing. If nobody ever placed a market order, the market would stay still and not move. Okay, so just really simply imagine everybody in the world only placed a limit order. The market is not going to move, is it? Because you would have an auction process, okay, where you've got somebody waiting to, you know, somebody waiting to sell and somebody waiting to buy. But if there's nobody actually then stepping in and saying, okay, I'll buy it for that, or I'll sell it for that, then you just got advertisements, essentially. Okay, so the limit orders could be viewed as this. They're advertising. People will sell at this price and people will buy at this price. But you need somebody to actively then say, okay, I'll buy it off you for that, or yeah, I'll sell it to you for that, to actually you know, enter the market and move the market. So the passive orders are basically your advertisements, but then you need someone to actually step in to move the market. Otherwise, it would just literally stay still forever, essentially. So the market obviously is moving all the time, because you do have people entering the market. Be that stops being hit, obviously stops being hit are generally market orders. You'll then have just people, you know, entering that market. But so that's what the difference is between passive and aggressive order flow. And Delta, so what is Delta? Delta is the sum of aggressive trades. Okay, so it's your aggressive trades at market. okay, buying or selling. It shows us who was in control. So we use the delta statistic to basically see who is in control at every, you can see this at every individual price, but generally speaking, you're not really so overly interested in it at one particular price. Generally speaking, we're going to be looking at the delta of the overall candle, be that delta of an overall candle on a 1 minute time frame, or the delta of the candle on a 4-hour time frame, or as we'll be getting into in further live streams, the delta of a candle on a 20 million candle. So obviously you don't need to be trading off the time frame candles, but yeah, that's how you work it. That's what it is. And delta is either positive or negative. So really simply, if we come on to this next slide, what we can see here is this is again, this is exo charts. You don't need to have exo charts. It's you can use your own software sort of thing, but this is your footprint chart. Okay. So as we know from last week's live stream and the week before, you can look inside of a candle and get information from that candle. Okay, so you can expand it, take out the magnifying glass, and see exactly what you have within that candle. Which firstly just provides you, an advantage having this over a trading, someone that just uses TradingView. Being able to see this information is really, really, really helpful. And I don't think that I really have done it justice over last week, because it's insanely helpful. But if this is how you work out the delta then. So this is obviously our volume. So really simply 1.7 million, 1.5 million, 900,000, 3 million down to 11 million at the lows. Okay. So this is really simply the overall volume, all of the buys, all of the sells, and that's the overall volume. Okay. Then we can see within this 1.7 million overall volume at this price, and 1.5 million at this price, and 11 million at this price, that is comprised of 1 million market sells and 667,000 market buys. And then to work out your delta, you're taking 667,000 minus 1 million, okay, which is in this instance going to give you a price of negative 351,000. Okay, so another example, you have 3 million delta at this price, and then you have 229,000 sold at market, 2.8 million bought at market. So if we take the 2.8 million bought at market minus 229,000, well, again, it's averaging, it looks like a little bit here, but nevertheless, that's going to give us 2.6 million delta positive. Okay, so if we look at a negative delta here, if we look at then this one, so again, here we can see overall volume 7.4 million. And then we can see that was comprised of 4.1 million market sells and 3.3 million market buys. So we take 3.3 million and we're taking away 4.1 million. And then that obviously is giving us this calculation here of minus 762,000. So the delta is negative 762,000. Okay, so one more example that I'll give you. Really simply 13 million here. Okay, so 13 million, that's comprised of 5.2 million market sells, 7.5 million market buys. That's given us an overall delta 7.5 minus 5.2, overall positive delta of 2.3 million. Okay, so also the shading. So the shading is a way that you can see this. You can see that this was heavy, is highlighted pretty green, because that's showing us that there was a lot of volume in this, and it was a heavy positive delta. Okay, and you can see how this one is slightly passively is slightly lighter, and that's because of the fact it's a negative delta candle. So it's trying to show you like visually, and I can load up the chart so this is a bit more clear. It doesn't show so well like zoomed in, I suppose, where you can't see it in comparison to other things, but this is the delta for each price. Okay, so this is the delta at each of these prices. Again, you can change tick sizes, so you could see the delta at literally every, if you wanted to, every 0.5 cents. Okay, so every 0.5 cents, obviously the tick size over at BitMEX, but obviously you can increase the ticks, or decrease the ticks to get more of a compact view. And then at the bottom of the chart, we can see the overall delta for the whole candle. So moving on. This is what that would look like. So obviously this is the zoomed in view within the candle, within each price. So of each price, we obviously have its own delta for every dollar increment here, or every 50-cent increment. And then this is what it looks like with more of a zoomed out view. Okay, when you zoom out of that. Okay, this is obviously zoomed in. When we zoom out, we're just left with this overall information. So this was the daily chart, if I remember correctly, when I was taking this print screen. And this is showing us here some key information. So on these two candles that we can just clearly see here, we can see an overall 2.33 billion volume. Okay, so we can see overall this candle was 2.3 billion volume with negative 40 million delta. Okay, and on the second we can see 2.1 billion volume with 32 million positive delta on this candle. The delta bars at the bottom give a visual representation of the delta of that candle. So what's sorry, I need to cough. Excuse me. So what's interesting about this, and this was literally yesterday, so you can, well, it would be now 3 days ago, so you can go and like verify this yourself, take a look at the charts. But what was really interesting for me is that 2 days ago we had this green candle. Okay, the candle finished green, which many might think is bullish, but then you have a green candle with actually negative 40 million delta. So this is a statistic that you are wanting to be aware of. I've made a little note of it here. Just like be aware that the candle is green even though it has a negative delta. So this is a strategy that you can use for trading. So it doesn't always mean just because you have a green candle that necessarily the delta of that candle is also going to be positive. There are inverse correlations and there are strategies that you can achieve from this. I'll be linking this into next week's video, but yeah, that is a strategy in itself. But just so you're aware that this is the way that you get the statistics. So this would have been the last 2 days on Bitcoin. You can see the overall volume, then that's the delta volume, and the delta when you're zoomed out, okay, and then zoomed in. You obviously can see the delta zoomed in. This is zoomed out, and then the delta bars, okay, at the bottom. Again, it's going to be slightly different on every platform that you're on, but the delta bars are really, really simply going to be showing you the delta, okay, of that candle. So there's a few really key questions, two key questions that you have to ask yourself when you're looking to trade. Okay, so question number one that I think you should be asking yourself is, what direction is the market trying to go? So that's the first question that you should be asking yourself. The second question that you have to ask yourself is it doing a good job in its attempt to go that way? Excuse me. So these are two questions that you can be asking yourself every time you come to the market, every time you load up your computer, okay, when you're looking at the generally higher term timeframes. So one, we can answer this question. We can answer the question of what direction is the market trying to go. We answer this question very simply by looking at market structure on a high term time frame. So really, very simply, what we can say to ourselves is, which direction is the market trying to go? Well, just zoom out to a daily time frame, for example, and look at the market structure. If it's making higher highs and higher lows, we can say that the market is trying to go upwards. And if the market is coming down on lower highs and lower lows, we can say the market is trying to go downwards now. Okay. And if it's making higher highs and higher lows, it's trying to go upwards. And then is it doing a good job in its attempt to go that way? And this is the crucial question. Number one is easy to answer. Number two is, a bit more harder, advanced to answer. So I like to approach this question by looking at delta. Delta and volume, obviously they are kind of hand in hand, but nevertheless, we like to look at this by looking at delta and volume. So knowing that the market moves from active orders, if price moves higher, then what we would like to see, the volume amount of active orders also increased. If that is true, then yes, the market is doing a good job in its attempt to go that way. If false, and price is moving up with a decrease in active orders, so for example, you're moving up and you're getting a decrease in positive delta, it is not doing a good job of trying to go upwards, is it? It's doing a poor job, and we would say, okay, this is considered bearish, and we're more likely to expect a decrease, especially if the volume and delta are both decreasing on a rise. That's even more bearish. Okay, so these are two key questions that you can be asking yourself when you approach every day. Okay, so when you approach every day as you're going to trade, like I like to run through personally like a checklist essentially of things that I will run through before I start trading every day. Okay, and these are two of the questions that I don't necessarily write it down anymore, but I used to. But I don't really write it down anymore. But these are still two things I will ask myself. Okay, so really simply, what way is the higher time frame market going, and is it actually still doing a good job in going this way, or are we reaching, for example, a distribution range and we're now likely to reverse to the downside? So these are two things that you got to be asking yourself. And moving on, how do you answer that effectively? So Delta, starting off with Delta clusters, and then we're going to be moving on to the specifics of Delta a little bit more thoroughly. So Delta clusters to start with here. So Delta clusters show us areas on the chart with high Delta. So really simply, just like our volume clusters, Delta clusters are, I would always use a Delta cluster over a volume cluster. I feel it's a little bit better information. So this is useful to use, for example, if we can see an area on the chart with a high Delta concentration, we could expect price to revert there if revisited. For example, and this was a perfect, I love it when I do the really good examples, I do. So this was taken a few days ago while we were sat around 9,600. We had just seen our increase in price to around 9,000. Okay, so here, for example, we can see a lot of green positive Delta towards the top left of the chart, and I'm referring to here. This shows us that there were many traders expecting a breakout. Upon the rejection, okay, so upon falling back down, they may, they're definitely likely to be underwater. So when price revisits this level, specifically we could say the previous day value area high, this volume cluster, Delta cluster, they're all happy to be closeout break even. So what we could say is if this was if there was a lot of negative Delta up here, if this was, in this example, it's shaded heavily green. You can see the heavy shades of green here. And this is a Delta cluster. So heavy green signifies a lot of buys. And if you see, for example, there's no really heavy selling on this, but let's just say here you have a little bit of a heavy selling. If this was more concentrated, then we can say, well, there was a heavy selling there. But here, in this example, we can see there was a heavy green concentration of Delta here. Obviously what we could do is zoom in to this candle, and then we could see exactly how much Delta there was there, which would obviously be helpful as well. And nevertheless, what we can just really simply see on these Delta clusters is there was a lot of buys here. So what does that mean? There is a lot of buys at this price, and then price decreases. So when price revisits this level, let's say there was 100 million positive Delta here. So that's a lot of positive Delta, isn't it? Okay, 100 million. In fact, there was 57 million in this candle, but what we'd have to do is zoom into this exact price. But let's just say, for the sake of the example, that the overall Delta is something like, 700 million, and there was 100 million here. What we can say is that's a lot of positive Delta. So as we revisit that price, the 100 million of contracts that were bought here, those are underwater positions, and as price revisits, you're likely to see this get a reaction and head back down as these people close out break even. For example, if you're at a high and you see a lot of heavy selling, and this was actually shaded more to the gold color to signify heavy selling, well then as you break down, that is just good to see. And as you revisit that level, there's no reason why you would necessarily expect there to be such a strong rejection from that level, in my opinion. It's more signified heavy buying at a high. When you revisit, you can expect the pullback, or heavy selling at a low, which is then obviously revisited. Then you could expect a heavy pullback, just as these traders get, essentially they're underwater during this time. Again, we don't know 100% whether they're still holding, whether they were stopped, but it's just the way that we dissect this information. When we can say as it retraces back up to this level, again, please don't use this blindly. For example, the confluence here was the heavy Delta cluster as well as the previous day value area high. So there was confluence at this level to expect the rejection, essentially. Okay, and how did it work? Really perfectly. We got so this is a follow-on. Price did run into that high Delta cluster and got rejected as one would have expected. So there was our heavy Delta cluster running as winter confluence of previous day value area high. We slightly get through the previous. Well, actually, this was the following day. But as you can remember here, this was 9,900. Obviously, the next day has changed. But nevertheless, this was our following day after. Okay, and we managed to break up. Okay, we managed to break up there, test this heavy Delta cluster. Test that heavy Delta cluster and reject. And from here, we have just hit 9,000. What we came down again to like 9,300 just a few hours ago, and that was off the back of this rejection. So if that just this straight away is highlighting to you how perfect that is, how absolutely perfect this was. We had confluence of the high Delta cluster with the previous day value area high. Price ran up into the previous day value area high / this heavy Delta cluster, got rejected, and we got that short within $3. I shorted this within $3 of the high, which was insane. And then we obviously a few hours ago we got a retrace to 9,300, so that's a $600 decrease. And so that's delta clusters. I hope you understand that and how they work, why when we see heavy green at the top we can expect a pullback. If there's heavy selling at the low as it's revisited, we could also expect a pullback. Again, don't trade off of it blindly. You want to see confluence, but it's a strong confluence, especially if this is really heavy. So it is, you do want to see, you can sometimes see heavy green and it's not a massive volume, but imagine that you're going to have to zoom into the charts and see it essentially. But yeah, that was delta clusters. Okay. So I guess what I could do here a second is just load up it on Exo charts, and we will just show you exactly what I mean by this visually as well. So what we can see here is, what we can do is very simply take off this a second so it's not so in our faces, and I will increase the tick increments. Okay, increase the tick increments, and we'll zoom out a little bit. We'll come up to something like a 4-hour time frame. I'm just showing you how you can look at this on the charts. So for example, let me just put this down, and what you can see is, so just visually looking at this, okay, so just visually looking, you can see that there's areas here, there's a lot of green heavy buying here. It's generally you want to see it at the highs. Okay, so this is in the middle of the range and then it's been passed through lots of times, so this for me is not so helpful. It's more so when you can see something like this. So you can see visually, I can kind of see it already, where there was a lot of heavy. Okay, we can zoom in a little bit here. So you will want to put your text on delta, and then you can zoom in here. So it's not overly massive. If we put this as well on the bid-ask profile, yeah, well actually it's not massive. So it's probably I'm trying to find a really quick example for you, but this yeah, I was going to try and find a really quick example, but essentially what you would be looking for if you're zooming out here, okay, is you want to see a cluster where you have on the top really an untested level where there's a lot of heavy buying. So this is still a pretty good example. You can see here how it's pretty dark. You had a lot of heavy buys. You also had that point of control. So you can see here how this was a point of control. You have the heavy cluster buys here, and then price revisits that. It rejects off that level. It was also the previous day point of control. You come into that confluence, and then you can see how you reject off that level. You get a pullback before another attempt, and obviously the sell-off that we just had. But yeah, that's essentially how you use the delta clusters, and it's just delta clusters, and then you can put your text for when you zoom in on delta to really see the levels. And again, you have to zoom in, and here we could see 3 million, but generally speaking I don't really care so much when it's in the middle of the chart. So if I saw a heavy cluster like this, so this is pretty important, but if I see a heavy cluster like this but then prices pass through it, I'm not interested in this so much anymore, because there was a lot of volume there. But if prices pass through it several times like this, well, this is now irrelevant to me, because these people are very likely to have closed out, because it's just, that's the way I view it. This is not relevant. Whereas when we see a heavy delta cluster like this at the highs, which was then an untested level because you got that level and then you sold off immediately, well then that's essentially an untested point of control. So you have an untested delta cluster, which then revisited gives these the opportunity to sell up, to get out, break even. What I wouldn't then do is, if price had in fact come back into this and rejected and then come back up again and done something like this, well, on these attempts I'm still not going to be looking at this, because then you've tested it once, they had their chance to get out, break even twice. I'm not going to keep on referring to this chart when we get price action through the level like that. So it's really, I'm looking for these delta clusters at highs specifically, or at lows specifically, which are then untested. So I'd only look for these trades off for the first attempt, and again I want to see that confluence, and on that example we did. So yeah, there you go. Hopefully that has explained. So yeah, when you I just glanced at to the comments, and yeah, that is the same for obviously for shorts as well. Okay, so that is that same theory, but for shorts to the downside. So now moving on. When you take out the high of a range for a healthy breakout, and this is now referring to how we use delta in a breakout. Okay, so there's two main use cases of delta specifically, and this is delta in a breakout of a range, or delta when you're actually inside of a range. So generally all the time, if you understand. But yeah, when you take out the high of a range, okay, so imagine you're range bound and then you are breaching the highs. For a healthy breakout, you want to see positive delta increase. The reason why you want to see positive delta increasing, and obviously volume, they kind of go hand in hand. When you break out of a range, as it shows you that new money is coming in, again, you would be looking. So it's not like you only look at this. You are going to be looking at open interest, net longs, net shorts. But, it shows that new money is coming in to buy at these levels, and that will support price when it breaks out. Whereas if you break out of a range on low delta, it is considered bearish as price is moving up with less interest from active buyers. Okay, so as you break the range, you want to see this increasing. It's showing you that people are interested in doing business, specifically buying at these higher levels. If you break out on low delta, low volume, it's you as you all know, you can move up on lowering volume. It's bearish, and you do expect it to sell off. It's not to say it's impossible to move up on lower volume. It's possible, but it's bearish. Okay, so you are more likely to get a return back to the range. Okay, so if you break up on these lower deltas, then you just expect it to be a fake out, to be a swing failure, and come back into the range. Okay, and the same applies to a downtrend. So everything that I'm saying here, although I've kind of used it with bullish scenarios, the exact same applies to a downtrend. Okay, so for example here, if you have a range and you break downwards from that range, you want to see the negative delta increasing. So let's say the original range was formed on negative 20 million. Well, then as you break down out of that range, you'd want to see, for example, negative 40 million delta, and then that's showing you that the aggressive selling is increasing. Okay, so what we would like to see, and this is just another example here, what we would like to see as price increases and makes new highs, so this is referring to breaking out of a potential range. Okay, what we would want to see is an increase in volume on the break coupled with an increase in positive delta. This is because if we are increasing price to potentially a new range, and as you know, price goes from range, impulse, forms a new range, impulse, forms a new range, either then breaks out, forms a new range, which is then a rejection, and we start to head back down. But you essentially go from range, impulse, range, impulse. So this is because if we are increasing price to potentially go to a new range, then we need to see evidence that is accepted by the market. And how do the word acceptance, okay, is all about volume. Okay, it's very important, the volume. Price moving up on lower volume can happen, but as mentioned, it's a big red flag. So in this example, and this is an example on Bitcoin, in this example we can see how an initial break happened on 274 million volume and 52 million delta. Okay, positive delta. So we were in a range prior, we were range bound, and then we broke out of that range on an increase in volume and an increase in positive delta. So that gave us our new potential trading range. We were breaking out on good volume with good delta that was higher than the previous range. There was no reason to think this was going to straight away come back down. Okay, so that was our first good sign that this was a breakout. Okay, but then later on, you get this secondary attempt to break out. So you obviously form your initial range starting with this much volume and this much delta. You then get a secondary attempt here to continue with the trend that comes on less than half of the volume and a fraction of the delta. So naturally, you try and then break out of this range on only 125 million, which obviously from the break is less than half, and from 52 million positive delta to 8 million, this is obviously just a small fraction of that positive delta. That's not what you would want to see if you're looking at this, especially high term time frame traders. I guess even for, lower term time frame traders, it's not what you want to see upon a breakout. That doesn't give you the confidence, does it? That doesn't give you confidence that this is breaking out. So this obviously ends in a rejection, and you spend a long period of time heading more sideways. So you then go sideways, and then you work up enough steam to attempt the highs again. Okay, and this is where you then get a bigger sell-off, because as you can see here, later price attempts to auction higher again. So you go through the auctioning process and you attempt another rotation at the high, and we could call this rotation number 2 of the high. Okay, so price on the break gets no increase in volume. It is very, very, very low for a breakout candle, and the delta is high but positioned from the center of the candle and not the breakout point. The following candle, instead of buyers holding up price, gets aggressive on the sells, and price auctions lower after the failure to break out. Okay, so let me talk you through this one in a bit more detail. So this is one of the biggest signs you can see. It's a swing failure of the high, and you're expecting then auctioning much lower, okay? Because it's just giving you no confidence, and you have to think that, you know, the word confidence, the word accepted, the word like fake out, these are all key, like words that you got to like think to yourself of. If you're in a range and you try and you do break the range, so you do take out the highs of that range, and it was on, as you can see here, 73 million volume. It's extremely low. So we can see the breakout was then a secondary break on a decrease in volume, and then a third break essentially on another decrease in volume. This is showing you that prices attempted to go up 3 times, and on each time there has been less interest in buying at these higher prices. So if there's less interest at buying at these higher prices, do you think price is going to keep going up as less people are interested in buying? Well, naturally, no. You are expecting it to come back down to then try and find more interest again. Think of it simply like that. And here I've mentioned that as you can see, the delta was here 8 million and we got 22 million. But as you can see, that delta was positioned in the center of the candle, and this is why you have to like zoom in to the candle to see. It was all positioned in the center of the candle. And upon the breakout, if you zoomed on for like a 1 minute time frame, you would see that the actual breakout was on extremely low volume, no interest in buying, and then that's when you come back down. And you can see upon the breakout, the following candle, so this is important as well, the following candle after the failed auction higher was straight away coming in at negative 16 million. So that's just highlighting to you that people then are straight away getting aggressive on the sales. Okay, then obviously you break the lows and you auction again lower. So this is some statistics of what we would look for. This is obviously a failed attempt at breaking higher, because on each attempt you're decreasing in volume, and importantly the second attempt is on a tiny amount of positive delta. The third attempt gets an increase in delta, but that delta is positioned at the middle of the candle, not at the highs. So then how could you look at this really quickly to get the idea? And this is how you can look at delta, or like, what I'm trying to explain here is like when you're taking the highs, how could you look at this from a visual standpoint of what you want to see versus what you don't want to see. So here we can see, I might need to highlight this a bit so it's a bit clearer thinking about this. So as you can see here, we take the lows, and you can see how there's a range formed here. Let's say there's a range, and you try and take the low here on really low volume. Okay, so if you would zoom into this, you'd be able to zoom in and view the delta numbers. But we can see just visually that there's no volume in here. Okay, so this signifies high volume, where it's like very thick, whereas you can see this is no volume within this, is there? So if you break below a low and there's like no volume behind that move, then don't you expect it to then come back into that range, because there's nobody actually trying to sell at these lower levels? Or no, there's no interest in an auction happening at these levels. And if no one's interested in buying and selling, well, it's naturally one would expect it to come back into the range where it was accepted. Okay, and this is then an example of one where you would expect follow through, because you can see here this is the low of this range. Okay, so imagine we were in a range bound environment, and then you break the low of this range, and then straight away you can see that originally you had a lot of price action through the lows, and then on the following candle, you almost try and retest this low. Actually, if I drew this properly, you can see how you do retest this low. Okay, so this was actually the original low that you do. Okay, so you can see how there's, firstly, one would say is possibly a bearish sign that you do get a lot of auctions through this low. It's happening on pretty heavy volume, but then on the following candle you retest that level, and then you get this sort of this sort of shape on the bid-ask profile, where as you're coming down there's an increasing amount of sell. Okay, so there's an increasing amount of sell orders. So now after seeing this, you would expect that this would then continue to auction lower. As you've broken the lows, you've retested. Again, you can see here how the retest was on low volume, for example. And then you come back down and you then start selling again on this sort of shaped bid-ask profile, where the sells are very aggressive. And one would expect that it would continue down lower. So this is an example just visually of how you would not want to see a breakout happening versus how you would want to see a breakout happening. Again, these P's and B's are like visual representations of whether people are aggressively buying or aggressively selling through a high and through a low. Okay. So delta helps us confirm the breakout instantly. Okay, so I love to trade using delta and open interest to see when we approach a high and a low, is this high and low likely to be a fake out or a swing failure pattern? Or are we going to see follow through? If we are breaching a high and the high is taken on a large delta influx, so we see a lot of delta, coming in as we break, along with net longs increasing, then I would not look to short that break. I would not, there would be no reason to me to look to short these highs, okay? And I would likely look to market buy with strength. When you see these signs, entering in at market is the cost of business, and you shouldn't think I can never market, enter at market. There are times like this when you would enter at market. We would also want to see a bid-ask profile looking like a P with them follow through taking to highs. So what I mean here is just like at these bid-ask profiles here, if this was breaking a high, then what you'd want to see is your bid-ask profile really simply looking at something like this. Obviously this would be straight, and then you get your lots of buys coming in and taking the highs. So basically it's just showing you people are happy aggressively buying these highs as we're breaking higher. Okay, and also upon taking these highs, we wouldn't just look at delta on its own, but we do want to look at net longs. Obviously net shorts and open interest is key. So the advantage of this, so the advantage of looking at delta is we don't need to wait for like arbitrary 5-minute closes, 15-minute closes. I get asked a lot, Daniel, when we break this level, are we waiting for a 15-minute close? Are we waiting for a 5-minute close? Are we waiting for a 1-minute close? Or are we waiting for a 4-hour close? Are we waiting for 2 consecutive 4-hour closes? You can see how arbitrary this number really is. Like, why do you need to wait for a 4-hour close above a level? It's kind of arbitrary. Why are we selecting 1 minute? Why are we selecting 4-hour closes? It's pretty arbitrary way of looking at things. So what's a better way of looking at things? Instead of saying, okay, we've spent 10 minutes above this level, this is accepted. Well, guess what? You could spend 10 minutes above that level on really, really low volume and then go straight back into it. You could go above the level, spend 4 hours above that level on really, really low volume and then come back into it. You might say to yourself, I waited for the 4-hour close and I thought I waited for confirmation. I waited 4 hours to buy and then price come back into the range. Why is this? Well, the answer is that 4-hour close was absolutely meaningless if you broke out on really low volume, isn't it? Like, it really simply is. So when we can see delta straight away is supporting the breakout. So we are breaking this level on an increase in delta. We're seeing, for example, these P's on the bid-ask, profile on the footprint chart, and we're seeing volume and delta, increase. We're seeing net longs increase. Straight away, you can see that, all of this is supporting the breakout and react within seconds. Okay, this is obviously referring to scalp traders, but you can react there within a second. You can see this data and you can get into the trade. And what I am going to emphasize here is I'm not saying you cannot wait for a 15-minute close above a level, but I think you can all agree with me on this, that many times if a breakout of a big level, if you break out of a big level on high delta, then the likelihood that this level is going to stay around for 15 minutes while it confirms to you your breakout, I think the likelihood is that you're going to miss the trade and then you waited for your confirmation and you've missed it because it's already took off without you. So the reason, though, we want to see an increase in positive delta when we break the high is that this shows we have more active buyers coming into the market to support price. Imagine you break a level on high volume but on negative delta. This is not what you want to see on a heavy breakout. Fake out sign is confirmed if you break that high and then come back into the range on an increase in negative delta plus volume plus net shorts. So what I mean here is if we break out of the range and on, you're going to, trading breakouts is for scalp traders, let's be honest. You don't trade really breakouts as a swing trader. If you break out of that range and then on that, let's say 1 minute candle, you come up on the top of that range, you have your range and you come above that range, and then straight away you start to see this candle is ending or getting in at the highs, a lot of sells at market, and we actually get something that looks more like heavily weighted to the sell side on the break on that, like literally a 1 minute candle, that's straight away telling you people are looking to swing forward. This larger traders are looking to swing forward this high. They're looking to trade the fake out because we've broke above the level, and straight away all you're getting is market sells. It's not what you want to see, is it? Especially then that is confirmed, because you will see this sometimes where this happens. The confirmation that it's a swing failure is then if you then come back below that level on an increase in negative delta. Then that's showing you that you originally had the people defending the highs short in a market, and then you've come back below the market and even more people are increasingly shorting this level. It's very likely that it's a swing failure, and that's not something that you want to, it's just something you need to be aware of, okay? Whereas if you break that high, okay, and you suddenly see like a P, and then you see the delta increase, the net longs increasing, and then especially if you take that high and you do get a back test and you take it again, you just got to market buy in. Like, you just got to go with that strength. There's no reason to wait for time frame closes. So now delta within ranges. So the way we approach ranges is different than when we approach breakouts. So obviously we know the market ranges more than it tries to break out. So if you reach the high of a range and delta of the buys falls off significantly, then it highlights buyers are not interested in buying this high. Okay, and it is more likely to remain range bound and come back lower. If you reach the low of a range and delta of the sells falls off significantly, then it highlights sellers are not interested in selling this low, and it is more likely to remain range bound and come back higher. Generally, when we are range bound, we will see active selling increase at the highs and active buying at the bottom of the range. If this does not occur, and then you break out of the range on increasing delta, it is likely to get follow through, especially if open interest during that range has been building up and building up and building up. Okay, so this is really, really key of what you'll be looking at the highs. And obviously when I'm saying here active selling is obviously high negative delta. What I mean by active buying at the bottom is high positive delta. So as you come lower, people are actively buying it back up to the fair, and then as you come up to the high, people are actively selling it back down to fair value, the middle of your range. Okay, that's what you generally expect to see. So here's an example again on Bitcoin. So in a range, we can get an idea of a range is going to break out and which way it is likely to break. So when you're range bound, you can get these heads up. This is why many times you'll have seen when we're at resistance of a range, and I'll say I'm buying this consolidation under resistance, for me it's bullish. Or when I will just simply say I'm trading the range, I'm going to short the range highs again. So this is how I determine whether what I'm going to do really. So okay. So in this example, we can see that there was a big sell-off. This was our original sell-off, okay, on really big volume. And this is what, this big sell-off is what started the range. And generally speaking, you get really big sell-offs and you get really big increases in price. And essentially you could say that everybody is sold on this, and then that's why we go sideways, why you either get more sellers again, or, there's too many people that sold, you kind of come back up to value. Or, at the same one, get a buying climax, everybody's bought, well, then you got to come back down, haven't you? So, this original move down happened on really high volume. That's just the first thing to note. A secondary attempt to sell off. Okay, here, buyers defended. Okay, a move to the highs. Okay, this move to the highs here. A move to the highs on high volume delta, but you nevertheless still rejected, and you come back down to fair value. And finally, a move to the lows. On high volume but positive delta. Finally, a breakout of the range on high volume and positive delta. So what are we looking at here? Okay, we can see this is volume, this is delta. You get the original move down, heavy volume, heavy negative delta. You then get a secondary attempt at these lows, okay, which is just over half the volume and a fraction of the delta. Obviously you don't really reach the lows, and it becomes an attempt that clearly gets bought up and failed as you come back and you test above the highs. Okay, but ultimately this fails as well. As you can see that the break here, okay, and this candle, and then if we line it up correctly on this candle, the actual break was on decent volume, but as you can see the actual breakout candle, again this is how it closed, but the breakout candle there was on negative 29 million. Obviously, though, as you know, I'm not stupid. We broke above that level and we closed back down below it. Again, you'd have to review this on like a smaller term time frame. But you know, essentially, what we can see, you know, from a swing trader's perspective, if you're a swing trader, okay, so this is how I would use this information as a swing trader. If I had only this information, and I had seen price has attempted to break out of this range, and then the candle has actually closed on you know, it was a high volume break, but we only had, you know, the candle has ended with negative 29 million delta. That's shown me that instead of buyers getting aggressive and continuing this breakout, that actually sellers were in control of this candle. Essentially, by seeing this negative 29 million, I could say to myself, sellers were in control of this candle. So upon seeing this candle, imagine this is the daily time frame, for example, then why would I not expect this to range back down to the value area low? Because I've seen a rejection of the highs. I could short here, stop loss here, that's where I'm wrong, and I would expect it to come back down to the middle of the range or the range low. Okay, you can see middle of the range, high volume, eventually come down to the range low. But that's what a swing trader would view. Imagine this is the daily time frame. It doesn't really matter. Like, if you break out the range on negative delta, then it's showing you that the buyers were not in control of that breakout. The sellers are in control. And then especially as you swing failure and you know, then you begin to auction back down to the lows. But then this is now showing you a sign that then, you know, at the very least, buying at these lows, expecting an auction back up, is because of the fact, as you can see, okay, I moved down to the lows, happened on high volume. So you can see the highest volume here happened at the lows of this whole range, was at this attempt of the lows. And also what's really noteworthy of this, again, so really similar, that you had a really big attempt or a high volume to break the lows, but it was a higher low. So you attempt to break the lows, which fails, and that obviously ends in plus 27 million positive delta. So again, what's this told you essentially as a swing trader per se, once this candle's closed? You've tried to take the lows on a really big volume and you've failed, and buyers were actually in control of these lows. So what would you expect? You would expect buy here, stop loss below the low where you're wrong, and expect it to trade up into the point of control of the range or back up to the range highs. Okay, that's what I would simply say you would expect, because of the fact here sellers were in control, here buyers were in control. You know, you expect it to auction back. Okay, so then if we are ranging and the lows are getting bought up with strong I can't remember if I read this. No, I didn't. If we are ranging and the lows are getting bought up with strong positive delta and the highs are seeing a decrease in negative delta, we can say this range is more likely to break upwards. Okay, upon seeing the break, if we get a big increase, you know, upon the break we get a big increase in delta and volume and we get $1,000 follow through. So what are we essentially saying that we're seeing here? That when we reach the highs, they're not aggressively sold. When we got to the low, they're aggressively bought. This is giving you a heads up that buyers are more interested in this range than sellers. Then as you come back up to the highs, as you start to consolidate under this resistance, as you start to consolidate underneath this resistance, you are already seeing positive delta, you know, getting pretty aggressive at the consolidation. And then on the breakout, you know, it's not massive, but you do break out with 51 plus million delta, which as you can see is more than any other actually on this attempt, but you got a 51 million break and 490 million volume on that break, which, you know, I'm not going to say is absolutely massive, but nevertheless, this I know, because I know this price action, it did get follow through for $1,000. So obviously it was about $700, but nevertheless it still got follow through as you broke out that range. So I'm just going to take another quick drink. Delta is a very important statistic when trading a range. It can give me or anybody that uses this a very big heads up of if I will continue to short the range highs or buy consolidation under resistance. Likewise, buy the low of a range or short consolidation over support. You cannot do this on the first rotation of the range. Okay, so if you break down, you know, on the first breakup of then the next breakdown, you wouldn't be able to like determine because you wouldn't have the data of what's happened prior in this range. Okay, but after you've seen your first rotations, then the next rotation of the high, you can see, are we breaking up? Are we reaching a high on? And actually, there's more people now interested in buying, or they're more interested people in selling. Like, you don't know this on the first rotation, so you have to remember that you would only be able to use this statistics once you have the data. But yeah, that's just something to bear in mind. So to have this heads up, I would like to have seen the last rotation to the low to either have been on a big delta but not actually break the lows, and this is CVD divergence, and this is what I'm going to be covering next week. So I'm going to be covering CVD next week for you all. And again, it's kind of hard because everything that I've covered today links in so closely to CVD stands for cumulative volume delta, so obviously it links in massively to delta, but yeah, CVD is another massive topic. So you might not understand everything from this week, but then next week's session is going to link absolutely massively into this week's session, which might clear up a lot of questions. I'm not sure. I've not seen the questions yet, but just be aware we've got CVD next week. And this is also what you're looking at of these highs and lows. Or the lows had extremely low negative delta or even a positive delta, which then increases as we reach the range highs. This to me would say buyers are now in control, and I would at the very least not short the range highs, or maybe I meant to put look to buy consolidation under resistance. So what I'm saying here is if you have been rotating in your range, okay, so you've been rotating on the range, and your last rotation to the low was on big delta but not breaking the lows, this would be bullish CVD divergence, or the lows had extremely low negative delta or even a positive delta, so you've come down to the low and you had like almost no delta, so extremely low delta, or even positive delta at the low, which then then that delta starts increasing as you range up to the highs. Well, that to me signifies that the buyers are in control, and then if you start consolidating under that resistance, that's pretty safe to say that you're more likely to break up out of that range and go and trade up higher. Okay, so that's the way that I would look at delta in a range. So key things that you want to be aware of then. So let's just review this. So when you are looking for a breakout, you are looking at the delta of the candle. Again, this generally I would be looking at this on much lower term time frames. But I'd be looking at the volume and the delta as we break out of this range. Okay, so upon the breakout, we want to actually see increases in delta and increases in volume in respect to that range. So we can see this range started on 270 million. We then had an attempt of 125. The range started on 52 million positive delta. We don't necessarily have to see 52 million delta again on the highs taken out, but we do want to see it more than what was in the during this range. So we can say that, for an example of what we would have wanted to see, obviously this is not what we wanted to see. What we would have wanted to see is this breaking up on, let's say, 300 million delta, and what we might have wanted to see is in that 300 million delta, we might have wanted to see a candle such as 30 million, because that's more than anything in that range. And we would have wanted to have seen that coming in at the highs. So, not in like this example where you have that delta concentration at the lows. You want to see that positive delta coming in at the highs as you're breaking out. Okay. And then how do you use this in a range? Well, what we're looking for in a range, as you are rotating from low to the high to the low to the high to the lows, what you want to see is, generally speaking, okay, so I put it here. So yeah, this is what we generally are generally going to be looking for. So one would expect, if the range is to continue, then you're going to see naturally as you approach the high of the range, you would be expecting to see an increase in an increase in negative delta as you approach the highs, as people are more interested in selling. And as you approach the lows, you would expect to see an increase in positive delta as people are more interested in buying that range. And if that doesn't happen, then you could say that it's more likely to break out. For example, if you approach then the high of the range again, and the high of the range is actually getting no active sellers and more active buyers, then you could say that's a heads up that you're likely to break out. And then the confirmation is obviously breaking out on the increase. Okay, so that's how we use delta in the range, in the breakouts, and how we use delta in terms of the clusters. Okay, so I've given you examples of all of that. I have a feeling that next week I am going to go over CVD, which links in massively to today's session. So many questions could possibly be answered potentially next week. I'm aware that they fit in together. So let me see what we have in here. Just loading up the questions now. So let's go. Can you compare the big delta clusters as some kind of CME gap, and at the end have to be filled to bring it to break? No, not really. No, so I don't think that's the case. So the question is, are these delta clusters? Okay, so are these delta clusters like CME gaps? You know, are they like CME gaps? Like, does this have to be retested? Okay, my answer to that is no. And I've never thought of it like this. Like, I would say, I don't know, I've never thought of it like this. Yeah, I wouldn't say that this acts like a CME gap where we have to see price revisit these high delta clusters before continuing down. Okay, that does not have to happen. Okay, at the end, they have to be filled to bring it back. No, so yeah, the answer to that question is simply no, or not for me anyway. What do you expect when there's heavy selling at the highs? Do you expect price to break through or reject? So if you are in a range and then there's heavy selling at the highs, well then naturally one would expect that to hold and you'd rotate back to the lows. Okay, obviously you can have times where there's heavy selling at the highs, but then you start consolidating under resistance and you then take the high on an increase in positive delta and you break out. So it's not like 100% set in stone. If you see heavy selling at the highs, you have to rotate down to the lows. This is where context is obviously crucially important. Look at the bigger picture. You know, context is it's so important. You cannot just have a black and white writing and say X, Y, and Z and always trade off of that. There are obviously discrepancies. There are obviously times where you will have heavy selling at the highs, but then that's overpowered on the following candle by people coming in and essentially shorting, squeezing those shorters. But generally speaking, when we are in a range, if you get heavy selling at the highs, yeah, you're going to expect it to come back down to at least the middle of that range. Okay, you might not expect the lows, but at the least is the middle is what you would expect. But of course, you can get heavy selling at the highs, which is then squeezed by bigger traders that then aggressively buy those highs and then we break out. So obviously remember that it's not a set in stone has to happen sort of thing, but we're just speaking generally, and then obviously the context is important to this. So if we next question is, if we have a big volume and delta in small range after a big move, we can say that this is absorption, reversal likely, and low volume and low delta means consolidation likely. So let me read this question again. If you have big volume, and delta in a small range, so this question links in heavily, really heavily to CVD. So I acknowledge your question, and I'm just going to say that next week I'll be answering that because this links in so heavily to CVD. Like, this is how you would look for absorption. So that will be covered next week. So don't worry. I'm not like ignoring the question per se, but I've got a whole live stream on that one next week. So that's how you see absorption. So but you're essentially correct. You are essentially though correct. So you are correct. But I'll go through like examples of all this next week. Wouldn't so the question here, wouldn't always be the price with more delta the point of control of the day? So there'll always be, so not necessarily. Okay, so you don't have to see for example, here we can see there was a heavy or a high volume cluster at the high. Doesn't mean that this is the point of control of the day. Point of control could have happened at in the middle of the range, and then we have this. So it doesn't mean that this has to be point of control. Okay, that doesn't have to be the case. Obviously, if it is, then you have even more confluence, but doesn't have to be the case. But if you do have that, then yeah, obviously it doubles up confluence. How do you work out the delta of a range then to know if we are breaking out on higher delta? So really simply looking at something like this. Okay, so really simply, where is the range screenshot? Trying to find it here. So really, oh, I was on it, sorry. So really simply, how do you know the delta of the range? You are simply looking at the delta statistics of this range as it's occurring. Okay, so I would be looking for, once you've started the range, which was on this candle, make a note of the delta that's happening on every single candle within that range. Okay, make a note of the volume, make a note of the delta, and then how do you know if you're breaking up on more delta? Well, look at what's happened within that range and then see, are you then breaking out on more delta than what's occurred within that range? Okay, that's how you know if you're breaking up on more delta or not. So how do you check increase in delta? Do you look at FPBS? delta bars or inside the candle. So I would just look at the, I can't remember what they call it on this website. Yeah, they do call it that. So yeah, the FPBS, or just basically, yeah, this bottom section. Yeah, that's where I'll be looking at it. So yeah, they do call it FPBS. So you are correct in that. You look at this, and that's where you can get your volume and delta statistics. That's where I'll be looking at, as well as on a smaller term time frame. I would zoom in and maybe switch to like a bid-ask profile candle layout. But I would always have this at the bottom of my screen where I'll be looking. Okay. Then the next load of questions that we have here. When we are looking at delta on the footprint chart, the time frame doesn't matter when breaking a high and low. No, not really. So it's less time frame dependent. All of these kind of theories, the time frame is not so important. It's more the volume and the delta that's important. Absolutely. So because this is good for breakouts and fakeouts, you need to jump in fast to a trade. Do you use market buy and sell? Yes, I am like absolutely fine market. You know, obviously, generally speaking, when I'm trading a range, I want to get in at limit orders. But if I am seeing evidence that we're breaking out of a range and it's happening on really high, you know, we're seeing high delta, big volume, increasing, you know, let's say in this instance we're breaking up and we're seeing net longs increasing, then I'll be more than happy to buy it at market. I don't have a problem with buying at market. It's just the cost of doing business. So yeah, I would be happy to market if we're seeing evidence of that breakout. Is delta mainly used for confirming breakouts? Well, it's used for confirming breakouts and when you're trading a range, so it's not mainly breakouts, but you can, you obviously use it for breakouts and when you come into the highs and lows of a range. So use it for both. I might go over today at the end. How much delta would you need to confirm it is a fake out? E.g. today, the dump to the monthly level was on big negative delta. The recovery is in low delta. The probability goes with the bears. Well, this was actually a really funny one, in my opinion. Let's just take a look at what actually is happening on it. Okay, so we can see here that we can say that firstly there wasn't a massive increase in volume. Okay, so if we're looking at this as a range, let's say here, okay, so if we're looking at this really simply as this range started on around 1.39 billion. Okay, then we've come down, attempted to break through at certain lows at 800 million, which is negative 32 delta. Okay, and then we've come back up to the highs once more on 500 million and 60 million delta. Okay, and from here where we can start to get some statistics as we come back down to the low here, we can see that happened on 600 million. Again, we haven't really got down to the exact low, but we've attempted to break down here, which was obviously on a decrease in volume. But again, this is to be expected because you don't actually, really come down so close to the lows. But obviously, just really simply what we can say there, that was 645 million volume and 73 million negative delta. Come back up to the highs here, 759, 67 million positive delta, and then this is the one the question's about. So that was on 754 million delta, 54 million volume and 78 million negative delta. And the question was, how much delta do you need to confirm it's a fake out? So obviously this is not really classed as a fake out because you haven't took the low. If we're looking at this as the low of the range and the high of the range here, okay, it's not really a fake out per se because you haven't you haven't come to the low of this range. Okay, so it would only be really say it's a fake out if you take the lows of the range, if that makes sense. So this is just an auction, high to low, high. I guess you could say that there's a smaller range, and this obviously requires other technical analysis, but we could say that there's a smaller range going on here, and then the higher range is coming in probably around here, let's say. So on this example, then you could say that there's a fake out. If we're looking just simply from the lows to the highs, this cannot be a fake out candle, can it? Because you haven't taken the low of the range, if that makes sense. Let me know if you don't understand. But for me, this is not a fake out because you haven't took the low of the range, have you? You're attempted to come down from the highs once more to the lows. But I'm in a long on Bitcoin, so how low of a time frame do you check for it to make sense properly? I could be checking this on the 1 minute time frame. It makes sense on every time frame. Obviously, the only reason why you look on the 1 minute time frame is if, for example, we were breaking the low of this actual range or the actual high of this range, then what you would do is you could then zoom in. Let's say price makes its way back down here, and then as we are breaking this low, well, that's when we would zoom into the 1 minute time frame, okay, to get the statistics on a lower term time frame. Okay, so yeah, you can use it on any time frame. You can use this on the 1 hour, the 4 hour, the daily, the weekly, or the 1 minute, you know, so it's used across all time frames. It's not like only works on certain time frames. I don't have offhand an example of that. If I'm honest, I don't have don't have an example of that one offhand, but I can look for an example over the next probably tomorrow, and I can just post that in the group chat for you. So for now, looking at the 1 hour delta cluster from the drop on the 18th. So looking at, he says there's a question looking at the 1 hour and delta cluster from the drop on the 18th. I guess here, are we now on higher volume and delta, which would indicate to continue? So on this happened on 391.72, or this happened on less volume, so this was lesser volume, but again you okay, so you almost double bottomed that. So you swing forward this low, so you did swing forward that low, actually very slightly. You do swing forward that low, and I guess what we can do is just zoom in and see what happened. Okay, so let's just zoom in and see what happened. So if we see this on the lows, okay, so let's come down to we're going to need to go even lower than this, 1 minute. So we can see that this original break happened. So this didn't make a note of what the past price was, but I think it would have been on this candle, and this happened. So you can see here how the break of the low happened on 39 million volume, and it actually ended in again, because it's not real time, we cannot actually see it as it's happening. This candle was obviously closed because I'm looking back, but we can see that this candle closed on plus 1 million delta, but obviously this candle has closed. So remember that this candle has closed, but what we can see is there was a break of the low, and it was on plus, it was on positive delta. It got bought back up, okay, and it was a swing forward of the low. If this was to get follow through, then you obviously want to see heavy aggressive selling of the lows, don't you? And that is, the candle has closed here on positive delta, and then the next candle was on plus 6.2 million. Okay, so it shows you that straight away that there were not people already interested in selling those lows, and it was more interested in buying the swing value of that low, if that makes sense. And I am in a long on Bitcoin, but it was not taken from these lows. I got in higher. I got a higher entry. In which case do you use delta profile plus FBBS instead of delta clusters plus imbalances? I guess there would be breakout, delta profile in the middle of the range. So delta clusters are when we are looking for more of a higher term time frame, zooming out, and we're looking for like clusters in the charts. Okay, and when we are using something, the next question was when we are using delta clusters, the delta profile. So this is more like looking at volume profile theory, so it's like a whole different kind of theory. Generally you'd just be looking at something like the volume profile, which looks like this. Okay, so this is a volume profile. Okay, and delta profile, instead of just going like gray on all of this and the point of control is highlighted, it's going to go onto a delta profile, and it's just going to show you, well, this is where there was more buys, this is where there was more sells. So they're two totally different things. This is like they're just simply two different things. This is just looking more at like a volume profile really simply, but obviously the delta volume profile, where instead of just really simply telling us where the volume is, it's telling us where each of these rows was sells or predominantly buys. So they're two different theories. Okay, and obviously the delta cluster is just showing us where there was heavy amounts of volume at the bid or at the offer, okay, at the ask. Yeah, so obviously, yeah, they're just two different theories. So it's not like one's better than the other. They're just two like different theories, if that makes sense. But you could use the footprint statistics on both of them. I guess the breakout would be breakout delta profile in the middle of ranges, in the middle of the range clusters. So yeah, I wouldn't really, I wouldn't really be looking at a volume or a delta profile while I'm scalp trading. You know, I'd maybe look at that when I start the day. Okay, so when I start the day, yeah, I'm looking at, you know, this is obviously looking at a volume profile, but it doesn't really matter volume or delta profile. It's exactly the same thing as essentially like, you know, I'd start my day looking at this, yes, but I wouldn't then be on the 1 minute chart looking at a volume profile. Okay, you know, I wouldn't use it like this. So yeah, this is helpful for a high term time frame perspective. See where you had your buys and sells, we see where the volume is, and then obviously you use this in conjunction with what's happened on previous days. And then the delta profile, okay, or the delta clusters is this again. I'd use this on higher term time frames, but you're looking for clusters. Okay, you're looking for clusters. You cannot really see anything here. You're on a too small of a tick chart, but you know, I'd be looking for clusters where price hasn't approached. So we could say at the moment when we have quite a lot of resistance at around 9,700. Okay, just really simply looking at this. Okay. There are a few more questions that I see. Okay, I'll end with these questions that are in here. So, can you use delta for reversal? And if possible, where can you look at the reversal to have a reaction? The question, can you use delta for a reversal? Yes, I struggle a little bit to understand the question, but essentially yes. Okay, so I guess we'll go back to the range example. If you are looking at delta within a range, and for instance, if we come to the low of the range, we would expect a reversal, is if we come down to the low of the range and you're seeing aggressive buying. Okay, you would, you know, if you're coming down to the low of the range and you see aggressive buying, then generally speaking, you're going to expect that reversal back up to the highs, aren't you? Or if you break down below the range lows and there's no aggressive selling and there's more aggressive buying, and again, you would expect the reversal. Okay, so you can use this to look at a reversal. Yeah, in terms of like how we use this in terms of new candles, that will have its own live stream. That's like that's even more in depth than what I've done today, like a more advanced topic. So yeah, I can't answer that in a question. Not a question, just a big thank you. Wow. The streams get better and better. Thank you so much. Yeah, it's an absolute pleasure to help you, mate. I never saw someone explain this so detailed. No, absolutely, you're welcome. Thank you so much. It's yeah, it means a lot. Thank you, honestly. Thank you. Cool. So that's all the questions then that have come in. So I guess I will end by just saying, yeah, thank you. I hope that this has served you well. I will end briefly. I'm going to end really briefly with my overview of Bitcoin. Really simply. I'm in a long position at the moment, and this was a long. Didn't take it off the monthly because I was actually too slow. But it would have, if you were actually at your PC, have had a really good trade, because you come quickly down into the monthly. You then had your reaction off the monthly, and then you had your higher low onto the monthly. I would have loved to have been there. Well, I actually was, but I was in a short from higher, and I was sorting out my take profits here rather than long in it. But nevertheless, I did then get into a day trade long slightly higher up, so I am in that long at the moment. Do I think that we're going to head up from here? Well, I guess not really. It's more of a short-term trade long at the moment for me, but that was taken off of this perspective, really actually simply, expecting that ascending triangle to get a fake out, and this is the one I'm referring to. Basically, we had a lot of aggressive shorts at the lows, okay, and as soon as we formed these lows, I didn't get in at the monthly, but I got slightly in above it, and simply this long for me was in the perspective of trap shorts. Okay, let's go back up to the medium here. So yeah, really simply, I've got a stop loss on this now, but yeah, I guess I'm looking for it to come back up to at least into the middle, back into the middle of this range, if I'm honest with you. So I'm looking for it to come back into here. Again, like, it's hard to short here. Like, imagine if you didn't short up here and now you're in a situation, it's not really it's not really so nice to short here because your invalidation is so far away. So that's generally why we would expect this to maybe come back up before getting a bigger rejection, just because it's not so appeasing to short here. You obviously have bounced off at a big monthly level. So yeah, really simply, I mean, on the larger term timeframes, yeah, I am a bit more bearish on Bitcoin, but from a short time frame perspective here, I'm in a long. I've already hit my take profit on that long, and yeah, I'd like to see us come back and retest. I can't remember where it is right now. Okay, so our point of control is all the way back at those highs. So did we get back up that high? I'm not sure at the moment. But obviously we've come back into the value area low of this range. So we could naturally, one would say possibility that we come back up and test this point of control. If we actually come back and lose this low again, I'll just get out of my long. Okay, I will just get out of the long, because on the higher term time frames I'm more bearish. But this long was really simply taken from like seeing the aggressive shorts at the lows, trapping them, and then I managed to get in slightly higher for a pretty decent trade. So yeah, it was based off of this fake out of this pattern essentially. But yeah, I don't want to go into too much detail on Bitcoin. I can just give you an analysis tomorrow on it. But yeah, bigger term time frames, yeah, I'm a bit more bearish on it, but there you go. So yeah, cheers everybody. I hope that you've enjoyed this. For any other questions, I'll be across obviously in the Discord. Just catch me on Discord. I'll be around there all evening. So yeah, I'll answer your questions. The rest of the questions, if I've missed any or there's more that come in, just catch me over at Discord and I'll answer your questions. And for the guy that asked for the example, I'll have to go back through the chart and find an example and I'll post it for you. So yeah, thank you everybody. I hope that you have thoroughly enjoyed this one. I think it's one that you're going to have to watch a few times over. So please just go through this stream and watch it a few times. But I also believe that next week's stream is going to help you, where I'm going to be covering obviously CVD, and that is heavily linked to this week's stream. So some of the concepts that we've gone through today will be more easily understandable and more easily how you actually trade it. It's kind of like a two-piece puzzle that you do need CVD as well as this. So yeah, I'm going to be going over CVD next week, which should answer a lot more questions that you may or may not have. So yeah, catch you next week in that stream or over in the Discord chat in a few minutes. So cheers everybody, thank you and goodbye. Bye.